The U.S. is flashing two major red signals that it could be on the verge of a recession. Many frontline analysts have warned. The forecasts have become increasingly starker after the July jobs report triggered the dreaded SOM rule, which is widely seen as a clear early sign of an impending recession. Worries about the U.S. economy rose after latest data hinted that the labor market is probably slowing down faster than expected. The jobs data had showed that unemployment is trending higher. Two major signs of a U.S. recession. After the latest jobs data showed that unemployment was ticking higher, the SOM rule came into play. This rule gets triggered when the 3-month average of the U.S. unemployment rate is 0.5 percentage points higher than the lowest 3-month average over the previous 12 months. This rule, which is considered simple and highly accurate, has been applicable in every U.S. recession that have occurred since 1949. Another sign that suggests a likely impending recession is the Treasury yield curve situation. For some time, it has been sending out worrying signals to investors. For a little over 2 years, the curve has remained inverted, which essentially means that short-term bond yields have been higher than long-term bond yields. This is not a normal condition, and it typically indicates that investors are worried about the near-term outlook. When will it hit? Experts forecast J.P. Morgan's latest report raised the probability of a U.S. and global recession starting before end 2024 to 35%. The likelihood of a recession coming by the end of 2025 remains unchanged at 45%, J.P. Morgan analysts said. U.S. could be on the verge of a recession, says Matt Higgins, RSE Ventures. The recession in the U.S. can be long drawn, and the effects of the same can be pretty severe and sharp, Higgins opines. There have been dissenting voices as well. Steve Englander of Standard Chartered says that the market may be a little too pessimistic on where the U.S. economy is headed. Not that it is doing great, but what the market is pricing seems to be a full-blown recession that the Fed would not have enough time to avert with rate cuts, he says. Popular economist Adam Posen believes that the U.S. may not be on the edge of a recession as being forecast by many top economists. The chances of an imminent recession may actually be far off, he says. U.S. recession odds. Key points to note. While U.S. labor demand is weakening, jobless numbers are up, and global manufacturing is seeing a bit of a momentum loss, these factors are being offset to a degree by solid continued gains in overall activity, led by the service sector, J.P. Morgan's data shows. Also, the vulnerabilities that appears when a recession is on the horizon, such as sustained profit margin compression, credit market stress, and energy or financial market shocks, are notably absent, the investment banking co-argues. Thanks for tuning in. We've explored two crucial signs that could signal a looming recession in the U.S. and what to watch for in the coming months. If you found this video informative, don't forget to like, subscribe, and hit the notification bell so you won't miss any updates. Share your thoughts and predictions in the comments below. I'd love to hear from you. Stay informed and see you in the next video.